And welcome back to the M3 Market Update. My name is Melody Wright, and I do this show to give you context around the data and information that we're getting out there on residential and commercial real estate. Additionally, I track about 82 markets every week, trying to give you a micro level view against the backdrop of the global macro economy. So welcome back. There's a lot going on, and today's show is going to be a little bit discombobulated because I have a lot of topics to go through. As you probably know, I was out in Texas with Travis from Real Estate Mindset. We'll put a link to his channel there, which meant that I wasn't able to do some shows for you, but hopefully you'll forgive me because that's some great content. We really tried to change it up and give you a view of multiple different metrics for all of these locations, such as multifamily, commercial real estate, long-term rental, short-term rental. And we found some amazing things on the road that just really underscore our thesis of what's going on out there in terms of all of these different themes that are going to meet in the middle for an explosion. So thank you for joining. I'll get started by talking about some of the crazy data we got last week. The first thing was that low GDP print. Everyone was expecting 1.6%. I'm sorry, everybody was expecting 2.4%, but it was 1.6, much lower than anticipated. And more importantly, guys, when we're in inflection points like this, and when things are changing so quickly, it is very difficult for the economists to get it right. And I will post the link to a paper by the San Francisco Fed about these revisions that happened, for instance, in 2008. Because, it just can be very difficult to gauge these things. At the same time, last week, we got a very interesting report from the BLS, and this is called their BED report, our Business Employee Dynamics. This report is way more accurate than their monthly report, where they give us, everybody is, I'm sure, familiar with the monthly jobs report that we get. That report, they sample about 670,000 establishments. For this BED report, they link to 9.1 million establishments. It's way more accurate. It takes a very long time to put together, but this BED report just came out recently and said that in Q2 and Q3 2023 combined, we were negative 1.3 million jobs. And so this actually underscores as well what I've been telling you about the 1.8 million jobs that were lost in the last 4 months. And so things are not as rosy out there as everyone wants to say. Underneath the headlines, there is a lot more going on. And that's really why I do this show, because I know that everyone out there is very busy leading their lives and they don't have time to dig around in all of this data. And if you just go by the headlines, you're going to be confused every time. Let's take new home sales. I'd like to talk to you about those. So new home sales were, it was a very strong report, an 8% increase. Guys, this was not what anyone was expecting. That, when we look at Zelman, they had seen decreased traffic at the builder sites. Others, even Bill McBride, it seemed to show that, March sales were not going to be as strong as, say, February. But in reality, I think sales were much stronger than most realized for both existing and new home. The difference, though, in the existing market, they didn't meet the high of last year. Now, that is contrasted with the new home market, where this blowout of 67,000 homes that were sold in March is the same number as what was sold at the peak of last year in May of 2023. And so what this is telling you is that the builders are getting super aggressive. We heard the same thing in an article that was published, yesterday from Business Insider about the 10 markets where inventory is increasing, the builders are being aggressive, and prices are getting slashed. And so, to me, that this article, as well as the article by Connor Sen last week about the builders being done, these are really two different advertisements. One is, I think that, existing home sellers, get out there, give the builders a run for your money. And then on the builder side, hey, everybody, if you want a new home, the smart thing to do is probably to take some of these, go to places where this new construction is really increasing inventory and get a discount. So neither of these headlines are really, think of it as an advertisement for what these vested interests hope that you will do. And, on the existing home side, I believe that NAR wants to play down sales because it's a price reduction story. And they don't want that to be the story. And because just think about, guys, if Americans are already, I just saw something about Biden having the lowest approval rating. I'm not trying to get political, but if Americans are already feeling, pretty depressed about the state of things, just imagine what would happen if they suddenly realized that Zestimate was fantasy. Okay, that would be a huge political headwind. And this is why I've said to everyone that in an election year, things are going to be very, very murky. But let's go back to the new home sales again. A very strong number. Not sure why others thought there might be reduced traffic, but perhaps it's just, perspective. Maybe the builders thought that traffic should be higher. I'm not sure. Or it could be that people like Zelman don't really, they don't have a ton of the local builders. And maybe the local builders are doing everything they can to push that product because, honestly, guys, it's that or it's bankruptcy, which is, we found a builder in Austin who has disappeared and abandoned a site there. So if you haven't seen that video, I definitely recommend it, and I'll put it in the show notes. Okay, so I think that the battle royale between existing homes and new homes is heating up. And what you're about to see is some really interesting movement in some of these markets because you've got a lot of people who have suddenly felt a little richer with what's been happening in the stock market. And it really feels like nothing can, redirect that narrative. But things change on a dime. They could change while I'm talking right now. That GD print, another bank failure that, related to those MBS or mortgage-backed securities with those low interest rates as well. But we are reaching a point where there are tiny implosions are happening all over the place. And it can be difficult for you to understand the larger narrative because they seem to happen in pockets of isolation. And so you have to be paying attention to really notice when the tide is turning. And guys, barring an exogenous event, a war, things of that nature, the tide truly is turning. And you will see people on social media out there saying things like, for instance, well, in my market, things are really hot. I'm seeing multiple offers. Rule number one, think about, how do you know there are multiple offers? Can they show them to you? If you ask for them, will you get to look at them? So you don't know. Are they lying to you? I mean, these are just, ask questions, ask specifics. And, I think we've seen enough indication that if your paycheck depends on it, people are going to see the rosiest view they can. Just remember, these are the same people that were telling you to date the rate last year. How is that working out? We are in higher for longer, right? So just keep these things in mind. The other thing that I will say is that I did a lot of driving around Dallas, for instance. I have also lived in Dallas. There are people out there talking about Dallas and talking about how hot certain neighborhoods are. Well, I was just there and I was in some of those hot neighborhoods. And what I noticed were a lot of remodels. But in reality, I believe that some of those are fix and flips. So I can give you some tips of how you can actually look. So let's say if you're in one of these markets in California where, they absolutely are very excited about their recent stock gains. Hopefully nothing happens in the stock market. But if you're in one of these neighborhoods in California or Dallas, what I would encourage you to do is to drive in the neighborhood where you are looking. See if you can find a remodel or a property that doesn't look fully occupied. Okay. And in these classier neighborhoods, sometimes that can be hard to tell because the help is still coming to the property and things like that. But if you don't often see the owners, you can go to Google, and let's say you're in Travis County and Austin, you can say, pay my property taxes, Travis County. And it'll take you to a county website. Put the address in. It'll tell you who owns it. It'll also tell you if they have delinquent property taxes. Is it an investor? Are they being honest with you about the price history? I've seen several listings where they don't give you all of the price history. So you need to do your research yourself. And if you leave a comment in the show notes, I can tell you how you can search for that deed, that the last recorded mortgage, to see what was last paid on that. If it's not showing up in price history and people are not being forthcoming with you. And so I believe that there is weakness already. And by the way, guys, we've had 100,000 layoffs this month. So what could be happening? You think everything's great in this neighborhood that you want to get into. Well, overnight, because I can tell you overnight in my client books, we increased bankruptcies by 200% from December to January. Okay. So these things happen quickly. It's gradually, then suddenly. And so I just want to say to everyone, don't always trust what's in front of you. Dig a little deeper to see what's happening. Okay. All right. So talking about inventory. And again, I told you I was going to be all over the place. So my apologies. But inventory is up everywhere. When I got back from the road, I was floored by the increases I was seeing. And the week over week increases were crazy as well. But just a quick summary on that, inventory is up 30.45% in Florida year over year. I'm just going to give you a couple of the states. For Texas, it's 34.36 year over year. And then there's some other states that are following close behind. Nevada at 37.89%. And again, this is for my cities. Washington at 35.38%, Colorado at 32.42%, and California at 29.71%. Okay, you know what's also interesting about some of those states? They have the highest credit card delinquencies because they had the highest are the fastest increases in home prices, taxes, insurance. And so Texas, Florida, Nevada, all in the top 4 for credit card delinquencies, guys. So once they're delinquent, they may not be able to sell. They may not be able to refi. And I know a lot of people talk to you out there about how great everybody's equities position is, but I'm watching it erode as we speak. And I'm seeing hardship letters from my borrowers, or from my client borrowers. They lost a job. They tried to get a job. They did the forbearance. Their spouse died. They're getting pension, but they can't find work. They don't want to go to foreclosure, but they can't find work and they can't afford to refi. Okay. And if they sell, it's going to be a short sale and they have no place to live. And so this happens, and then that population grows and it grows. And you guys all know, I don't believe mortgage right now is going to be the biggest part of this story. It will definitely come into play, likely more so in a year, but it's starting to happen. And these hardship letters are very depressing. And so for everybody out there that's talking about how great things are and how these prices will sustain, I just say, is that what you're seeing out there? And, what I shared with some family members recently is like, just look around your own family or friends and look at those stories. They are not the exception. Okay. So do you know somebody, a cousin who perhaps doesn't have a job? Do you know somebody who's ultra wealthy? How different is their perspective? So look and see what others are really experiencing around you when the narratives in the media are not essentially giving you the full truth. And again, they're trying to sell papers, guys. And, what we understand, great tweet yesterday from a former reporter at the Miami Herald talking about how, their budget was completely decimated. And so they stopped covering city planning meetings, city council meetings. And this is how so much of this stuff has happened. And so, that is my message, especially after coming back from Austin, is that you have to get involved locally. If you don't pay attention, there's no one else out there paying attention. And this is what has happened at Austin. They were sold to the highest bidder, guys. It is so apparent. And so, if we want to take back our homes, our neighborhoods, our cities, if we want to be able to invest soundly without government overreach, we have to get involved and we have to search and look for ourselves. Okay, one other random topic that I also wanted to talk to you about, this isn't in the Substack, is we got some more interesting information from that Hunter Brook short selling group I talked to you guys about and United Wholesale. They came out with another article, this time talking about an affiliate company called UMortgage, which looks like was a feeder line to United Wholesale based on these allegations, which, include allegations from insiders. They were 77% of the pipeline. And it looks like, or the allegation is that they were adjusting the UW, different bids in the back of this technology application they were working. So United Wholesale would look like they had the best quote. If this is true, guys, then this RICO case and these things have legs. And I think you guys know I question the people behind this group. There could be political motivations, but regardless, I think this is about to get really ugly, and this will play a part in everything we've talked about in terms of, this coming back from the non-banks to the banks. And, speaking of banks, I can't remember I mentioned, but, we also had a bank failure, the first of this year. So for anybody out there saying things are peachy and everything's going to be just fine, let's talk to those guys in a year. And so if nothing else, if you are stuck and you have to make a choice, you have to transact right now, I can give you tools on how to get the best deal. Just leave a comment and I'll get to it as soon as possible. But otherwise, there is just so many, this is just treacherous waters, guys. And we haven't even started to talk about geopolitics. So, what I want folks to understand, if you look at Austin, it's a case study. Tesla just had those layoffs. Larry Ellison from Oracle just said he's moving from Austin to Nashville. You've got more multifamily scheduled to be delivered there. They're number 4 for this year. And you already have an 89% occupancy rate, which is below the 94.1% occupancy rate nationally. Plus, you have new home construction that has gone absolutely bananas. Plus, you have empty commercial real estate and millions in progress, and it's already 18% vacancy. So there are just a ton of headwinds in all of these cities, and nobody's really putting the whole story together. So I would just encourage everybody just to stop and think. Now, the last thing that I want to mention is you guys have heard me talk about how the seasonal adjustments are problematic. And I believe that because we're putting our faith in economists who are, looking at models behind closed doors, not really looking at what's going on. And over time, I think these things have lost their usefulness. But we must remember we are in the high season for housing. So although I may not believe in these seasonal adjustments, there are definitely seasons in the housing market. You take the snowbirds, their season starts around October and is finishing up right now. Then you have the folks that need to move after school and they're going to wait to do that to sell or buy their house. But we are in the high season. And I would just say to everyone out there that sees things like the new home price, which came in higher, but not at its high, that's going to happen because those who are transacting out there are the ones who can afford to. And you can just look at the breakdown, which I show you in the Substack, of the increases in those new home sales are happening in the 750,000 and above and in the 200,000 and below. And if the builders think they're going to pivot to affordable housing, there's nobody really, that's not where we're seeing a ton of the volume, put it that way. 39%, in those higher value categories. And we're not all rich. There was a recent study by Forbes that 70% of Americans live paycheck to paycheck. and 49% of boomers. And so, things are degrading out there. These things can happen very quickly. And so my parting words to you would be, it's not always what it seems. In the next show, I hope to give you kind of a presentation slide of some of the data I'm seeing out there. I have the Redfin, sales and home price update, and I'll say that the Business Insider story talks about Texas and Florida, but you look at other cities, it's happening too, where you're seeing year over year gains in home sales. You're seeing year over year price declines. So guys, to move this inventory, be it existing homes or new homes, people are going to have to reduce costs. And just because what you have been watching for the last 2 years, even the last month, it doesn't mean what's going to happen tomorrow. What if you were looking at a home you just lost a bid on, and then another home goes up for sale, and you don't know, maybe in that neighborhood there were 2 people impacted by layoffs, then another home goes up for sale, and this happens quickly. Just like I was saying, week over week inventory increases were nuts. But we'll bring some more of that data next week in a presentation style. Okay, guys, thank you so much for joining me. I'm going to wrap it up here today. Things are not always what they seem. I will be working to get caught up on comments. And as always, you can reach me at M3_Melody, MELODY, M3 Melody Substack, and M3 Melody YouTube. Thanks again, guys. It was great to chat with you, and I'll talk to you soon.